Hello, welcome everyone. My name is Archis, as Tim alluded. So to begin with, what is Syfe? Who is Syfe? So we are a digital investment platform with a mission to empower people to build their wealth for a better future. Now, what does that mean? Our value proposition or our vision is basically to serve the underserved. We know historically all the traditional firms around us in the industries, and I'm guilty of that, being part of it before joining Syfe for last 14 odd years. We we were serving only the top few percent in ultra high net worth, high net worth. Now, a lot of us then come from those backgrounds and decided that we need to serve people who doesn't know how to invest, doesn't have time, and doesn't even know basics of or investing of 101. So how can we leverage our own experiences and build something which is scalable in a digital fashion, accessible, affordable, and make it available to everyone? So that's why we are here for. Now, I think just a quick one on our presence. So we're present across 3 markets in Asia Pacific, covering more than 250,000 users across APAC. To just translate, let alone in Singapore, we cover more than 5% of adult population. We are a 5-year-old company in Singapore. We started in our offices in Hong Kong and Australia recently. And through the years, these are some of the awards, but through the years, we've won multiple awards, like LinkedIn Startup of the Year, Wealth Management, FinTech of the Year. We dream to be an all-in-one platform, and we'll see how and what it means for you. So as I was saying, so Singapore, we started our journey, and that's our headquarter home market back in 2019. We are MS and CMS licensed there. In Hong Kong, we officially started our journey about a year ago. So in addition to being an SFC license, we even acquired MPFA license recently. Some of you may have seen us in the news around our MPF engagement with Manulife, being the #1 provider. So we are expanding pretty fast. We are growing pretty fast in Hong Kong. And this is part of the engagements that we want, and we want to build that understanding, educate people on how, again, basics, how to build your dream portfolio. Now, what do we really stand for, and how do we do it? So I think from our perspective, how we put it is our value proposition is simple, 3 A's. What does 3A means? Access, advice, and affordability. Now, again, access in the traditional space, especially if you go institutional, some of those access are very limited, only to, again, private banking clients or institution clients. We bring innovative solutions, we bring that access and make it available to everyone. Now, advice, we know, being an investment platform, just being digital is not enough. Especially when it's about money, you need somebody to help you, you need somebody there physically who you can call. At times you all become scared, we all become panicked. So we adopt a hybrid approach. So we are digital first, but we have a team of advisors, and Morten, who leads that team, is going to come and speak later. Now, obviously, last but not least, affordability. And this is, again, a challenge in the traditional world where there's a conflict generally, and there's a huge amount of middle layer of fees that gets embedded into any product that is sold. Now, us being digital first, we can remove that conflict, we can make it conflict free, and we can substantially reduce the price or the fees that we charge. And especially in the longer run, we know there's a huge compounding impact. If you save 1% per year, it can have 2 to 3x implications on your assets over a long period of time. Now, I think the team, so obviously, I think a lot of us come from very strong financial background. As the founder, myself coming from UBS, our COO coming from Morgan Stanley, others coming from Goldman Sachs, Schroders, but we are a fintech. So we have a good mix, like our CMO, marketing lead in Hong Kong, coming from Klook, Lazada. We understand, I think, having that finance background plus like that consumer-centric, the need to make it simple, the need to make it people understand is super important. So you will see that we all come from a very strong fin plus tech background. Now, I think this is something which we are very proud of. We are probably the only wealth tech or wealth management technology company in the region who is profitable. What does profitability means is like in general, as a young company, I think a lot of us would have seen other players giving large promotions to acquire clients, and then which is not a sustainable model. So similar to our investment philosophy, which is trying to focus on creating wealth for a longer term, as a business, we have done it in a similar way. So we have become profitable as a company, and this is something which is very rare and in the scale that we run and in the space we run. Now, what do we offer? Like as I was mentioning, like we claim to be an all-in-one platform. That's what we want to be. So typically, how we classify ourselves is like three verticals, like cash management, managed portfolios, and brokerage. So cash management is anything where it's to do with your surplus cash sitting in bank. How can you earn a better yield on that cash, either through fixed deposits or through money market funds, which are daily liquid and be accessible. And be accessible to you anytime you need. Managed portfolio is something where basically if you don't know what to do, you don't have time, and you need advice, you need help, you need someone to manage the money on behalf of you. Now brokerage, which is I guess most of you will be familiar, is your DIY. Buying Teslas, Alibaba, Tencent. So across the group, like we cover all those three verticals. Now in Hong Kong, we are more on the left side. Brokerage is to come. We have cash management solutions and managed portfolios. Now the interesting thing which I was saying, like we've gone into the digital retirement space as well, which is the MPF, and I guess it's a super important part of all of our portfolios. Retirement, obviously that's why we earn, we save, so that we can have a healthy retirement life. But MPF, I think for a lot of us, forget an asset. So this is again, we know without that we cannot be a all-in-one, we cannot be a holistic platform. So this is something again we have entered in Hong Kong and in Singapore as well. Now I think an interesting thing about Syfe, like I think we value, we understand. I think being a relatively newer platform in Hong Kong, confidence, trust, safety are the very 101 questions that people have in mind. So to address that upfront, like we are SFC regulated, we have 149, which means we could advise, we could manage your portfolios, we could run your portfolios. The custodian partners where your assets goes, we are partnering up with HSBC and Interactive Brokers, again the best of the worlds, completely segregated from any of our assets, so you don't take any kind of risks there. We work with leading financial institutions to curate portfolios, and thanks to BlackRock who are here with us today. Again, media coverages, we have been present in Hong Kong, not for too long, but you would see we have been covered extensively across 20 medias over the last 1 year. Last, obviously, I think a secure, seamless digital experience is paramount for us to succeed as a digital player, experience and having that smoother, seamless way to transact, to view your portfolios on a daily basis. And once you download the app, you'll realize how good it is. Now, I think, I hope that gives a good overview of who Syfe is. Now, I'll go to the next session of just a rewind of 2024, where we are today, and what has happened through the year, and what effectively we could expect in the coming quarters. Now, I think this is a good summary of how to look at it. So, like, obviously, this represents the performance of World Equity Index. Q1 of the year started with very strong earning across the spectrum, like the Magnificent Sevens, and in general, financials and tech reported very strong earnings. So that rallied the market. Now, obviously, like in April, the Middle East tension heightened. There were numbers around job data, inflation became stickier, which kind of created that sense of fear in the market. But very soon in the coming quarters, things settled down. The Federal Reserve in the US, the central bank, started giving signals that the worst is behind us, and they would embark on an interest rate cut cycle. And we saw that happening a month or so ago. And obviously, very recently, and very close to our home, like the stimulus in China, which has obviously, which has definitely given a very good boost to the local markets. The sentiments have been improving. Now, just a recap of the performance, and I think like the trend of this year again surpassed. It's a year to remember. Every single asset class has performed significantly well across the world. US equities, Hong Kong equities, fixed income portfolios, the traditional 60-40, like a balanced portfolio between equities and bonds, all moving in tandem. But if you look deeper, the US markets to begin with, a lot of it, and of course, NVIDIA, the most popular one, almost close to 200% up this year, like 3 times of what it was end of the last year, driving a significant rally in S&P, along with Facebook, Apple, Google, the Magnificent Seven, contributing to overall 50% year to date. Again, and super, extremely concentrated, extremely large moves, all driven, obviously, as some of us may know, by the wave of AI. If you look at the 493 companies, excluding those 7, you will see it's low teens. So again, significantly implies that a lot of the markets or the performance we see driven by a few names. Now, some of this trend is reversing, but and this is exactly like the risk currently in the index or US market is about valuations, is about the rally or the strong rally, and how the AI dream and how long can that dream live. Now, if you talk about China equities, obviously the fiscal stimulus that came in and the expectations of another big one through the meeting. There's a National Congress Party meeting next week, expected to have another bazooka stimulus, which gave us that rally of 20-25%. But if you look at it, it's still, even if you look at the spike that you see at the end of Feb, it's still well in range or even below the average of PE in like PE is price to earning ratio, so average of your earnings or your price to earning ratios, it's well below that number. Specific to Hong Kong, China. In addition, comparing to world equities or US market, significantly below. So this is where we believe longer term, I think obviously it's $1 million question when the sentiments in China will come back, but longer term, the valuations where they are, with the support of the fiscal measures that the government is planning and is aggressively taking, things are going to come back at some point. Now, taking a bit of forward-looking approach, like we've seen, so Fed, like the Federal Reserve, the central bank in the US, after a long cycle of hiking rates and extremely fast rate hikes, have started reducing the rates, cutting the rates with the 50 bps, which happened in September. Now, there is a kind of a huge consensus that by the end of the year, we'll at least have another 25 basis, or if not 50 basis cuts. With all the data that's coming out of the US, like the jobs is strong, the labor market recently came out to be strong, inflation coming close to Fed rates, there is a decent chance. Now, I think given what we've learned from the recent moves, Fed is looking to front load the rate cuts, so this is very well expected. But then the question is what happens next year, or how long the regime, or how slow later the Fed would cut. This moves on to a very interesting one, like, okay, how do you look at fixed income versus equities? Like given the rates where they are and the expectation that the Fed may slow next year, or even take longer to go back to the normalized rates of 2.5–3%, there are some certain firms estimating that over the next decade, and given the valuations in the US driven by very concentrated firms, the S&P returns over the next 10 years could be even as low as 3%, or in the range, like the typical range from the market is expected to be between 4–7%. What does that number mean? Like if you compare versus what we have seen and what we're getting used to is north of 10%. This has been the case for a pretty long period of time. But if you go back in history, during the periods where the interest rates were elevated, valuations were elevated, the valuations are like in a very high percentile of what it used to be before. So there is a chance, and this is what we believe as well, over the next 10 years, obviously not that low, but that era of very low interest rates, super hyper growth is behind us. So how do you balance that thing out? That's where like the fixed income assets play a role. And if the interest rates, even the 10-year rates right now, US rates are around 4%, that can help you to give that cushion, that can help you to get better carry and avoid some of the market volatilities. If you go deeper in the history, like what has happened, and as we have embarked on the journey where interest rates are getting cut, what has happened during different cycles, starting in 1981, this, like on average, if you look at it, it's bucketed into what's called pre-recession cycle and insurance cycle. Pre-recession cycles are where after Fed cuts, US economy has gone into recession. Insurance cycles are where the cuts are there to boost the growth back. If you see in all those cycles on average, fixed income, which is the US Treasuries, corporate bonds, have always performed. And fixed income generally has a negative correlation. The interest rates goes lower, fixed income performs better. So it clearly shows, irrespective of which period it is, as the cuts starts to happen, and this is not just even about when the cut starts or when the cuts will happen. This is talking about during that phase when it starts and ends, on average, how much the fixed income can perform. Obviously, US equities, you can see in the middle, towards the bottom, extreme moves, depending again whether you go into recession or whether you go into growth phase. Again, speaks about having a higher exposure to fixed income, given expectations of interest rates are going to be elevated, given where the valuations in equity markets are. It again screams that fixed income is something we should not ignore. Now, I think just summarizing, and that can lead into nicely into Natasha's session. What are the top things on our mind? Obviously, US AI theme. Given where it has gone, how far can it go? Whether the demand, whether the revenue side of things will come into play, which can continue that AI theme. It's definitely something to watch out. China policy meeting happening next week. The markets have bounced back. Can it drive retail sentiment? There's a lot happening to settle the property market, but can it really drive the retail sentiment onshore? And that will definitely, and as we were saying, the valuations are in China super suppressed. US, specifically US markets overall, GDP numbers that came out yesterday were softer, but there is still very strong consumer spending, job market. There's a high chance now US markets avoid a period of recession, but it all depends on how things play out, how earnings play out, and obviously the geopolitical risk, elections coming up. Last, Fed, the central bank plays a big role in it. Whether and how fast or how slow they cut interest rates can impact the results of the US market. So I'll pause here. We will take questions and during the panel at the end.
Oh yeah, thanks Natasha and Archit on the market insight and also the global market update part. My name's Morton. I am investment advisor from Hong Kong, Syfe Hong Kong. Today, before we go into this topic, how to create your dream portfolio, I just want to ask one question first for all of you here. What is your ideal financial future when you think of some of the things that your life after, before retirement or early retirement? What is that? Is it a beachfront retirement, or you want to start a business that you are more passionate about, but not solely for profit making? Or you want something like early financial freedom for yourself? I think everyone will have different answers to these questions because you will have different viewpoints on that. But what we want to try to say is today we want to give you some insights here that can help you align with your goals in future and how to make you closer to that reality. So nice to hear that, right? Let's get started. For traditional approach of portfolio management, usually we will more focus on the return for a specific product or portfolio, which means that the most disadvantage, the highest disadvantage of it is it lacks of any attention to individual goals and constraints such as time horizon, your liquidity conditions, and also some other unique preferences on your investment. What Syfe Hong Kong will be more focusing on is the second one, the goal-based approach, which usually a human touch approach, and also Syfe Hong Kong will use that from advisory side to serve our clients. We will try to set short-term, medium-term, and long-term goals to check with clients before we go into deep for a portfolio management planning for all of that. We will define the goals and know clearly about the risk tolerance level, risk capacity level for the clients, and then we plan out the portfolio for him, so that it will be more like a human touchable rather than just focusing on the traditional way that we just focus on the product without caring about the people. And if you see here, there is a general principle to manage your long-term, short-term portfolio. If you're looking for some short-term goals, say here, planning for a family trip, for 1 to 3 years, you have to take back the money and then plan out for your family trips, then you should take a more conservative approach, 80% to bonds, 20% to equities. And then if you see along this curve, the risk level is going up. When you plan out for say 5 to 10 years goals for your kids' educations and even maybe 10 years more for the retirement goals, then you can take a more aggressive approach. You can see conservative to balance to growth, and also for maybe planning for retirement for 10 years or over 20 years, then you can go a more aggressive pool. That would be 90% equity, or even you can put in 100% equity. So this is a basic principle we will use. As you can see from here also, for bond portfolio or for some S&P return, which is an equity proxy, you can see the 30 years annualized return for bonds is close to 4%. For S&P, over 10% annualized return. But the volatility of that S&P 500 return is also very high. So that's why we will recommend when you're planning some short-term goals, the focus is still on the bonds, so that you can have a certainty on your short-term liquidity when you get back your money in, say, 2 to 3 years. And what Syfe is offering for Hong Kong people and also the investor here, from left-hand side to right-hand side, you can see the risk level will increase. The most left-hand side, this part, we are focusing on more cash management solution. We have our cash plus flexi and also our fixed solution, which help all investors optimize your idle cash in banks. And especially you can check this cash plus flexi, which is launched this year. We help our clients to deposit, to have a play, giving them a fixed rate return, and help them to deposit into some of the leading bank partners in Hong Kong, with a rate that higher than that you can find in retail banks. And then to the middle part, you can see there will be income solution from us, and there will be two portfolio. I will be talking about more in details later. And we also have some equity portfolio, which are growth focused, and some thematic portfolio that you can pick your choice here, like China growth, healthcare, and so some technology and ESG and clean energy. So the basic principle for you to plan out your investment is for short-term goals, then you better to go for some cash savings, like our cash plus flexi, cash plus fixed solution. For some medium-term solution, if you want to look for generous passive income, then you may go for bonds solution. For long-term growth, you want to capture long-term capital gains, then you can go for higher risk growth approach. Then your money will be placed into equity. So this will be 3 buckets of your money to place your short-term, mid-term, and long-term goals. Let's take an example. Jason, a 30 years old guy, he wants to retire at the age of 65, and he has a wife and a 1-year-old daughter. His wife does not work, so he has to pay out all the family expenses for the family. So assuming 20K Hong Kong dollar per month, he can save from his salary. How can he plan out his retirement and her portfolio? Apart from that long-term retirement goals, you can see there is some short to medium-term goals for Jason also. At 35 years old, he has to take out 1 million Hong Kong dollar to upgrade the apartment because a daughter grows up and he needs a bigger house or whatever to decorate the house. And he needs estimate to be 1 million. And at 40 years old, he planned out for daughters for international school expenses for another 6 years. That will be also 1 million Hong Kong dollar. And 46 years old, then he has to plan out also some foreign exchange, foreign tertiary education planning for her daughter. So that will be another 1.5 million. So altogether, you can see there will be 3.5 million withdrawal before he can really retire, which is not a small amount, I say. So how can he plan out the whole retirement portfolio in consideration also to that to medium-term withdrawal? It will be a very clear portfolio planning that we always do for our Syfe Hong Kong clients. You can see the first one is, you can see the color first, you can see pie chart here, keep growing up from 30 years old to 65 years old. And the blue portion is core equity, which is our equity portfolio Syfe offering. And the income enhanced one is our bond solution, which the yellow portion represents this part. And you can see we will adjust the risk level for the clients when he get older and older. At 65 years old, you can see the year portion will become bigger, much bigger than that of the blue portion, because we will reduce the overall volatility and also the price fluctuation of his portfolio when he comes to retirement. So you can see the value still growing up as we tune down the risk at the same time, but the value still grows up. With that amount of withdrawal, he can still get 25 million at the age of 65, which can help him maybe up to 65 years, over 20 years, 40 years retirement, can retire comfortably. So this is something we will do for our clients, but I know every one of you will have different short to medium term goals. Also, maybe some of you want to say like want to retire before 65 years old, maybe 60 or even 55 years old. Then how you can plan out for this, all these things, then you can come to us, come to Syfe Advisory Team. We will help you to look into all those details to do a portfolio that match with your own short-term, medium-term goals to plan out your retirement portfolio. And for our income solution, what is it inside actually? We have two portfolios, one income enhanced and one income pure. Each portfolio, we have 6 different income funds. And we will take a more forward-looking investment approach, use a multi-step process along with optimizing allocation periodically based on different macro trends. And we will also have different risk management decisions, and we will do rebalancing for twice a year so that we keep our target payout at a certain level so that people can has a stable income at the same time. When there's a rate cut environment, there will be some price upside potential here. And for the income pure, you can see the distribution yield is 6.6%. And mostly, we invest into the bonds like North America and also some into Asia and Europe. And for the exit, you can see mostly are in the safest bucket, including government-related bonds and also investment-grade bond, comprised of over 7%. For the income-enhanced one, it is a higher yield option. I would say the pure one is more for generating passive income for our clients. Maybe some Hong Kong clients, they sell their properties, sell their Hong Kong shares after the sharp rise recently, then they can put in to that income pure to generate passive income to offset the expenses, the normal expenses. But for the income enhanced, you can see the yield higher, and more portion will be put into the high yield and also equity and convertible, which comprise over 50%. So higher risk level, higher expected return. So it will be better apart from only passive income generation if you want to look for some price upside potential under this rate cut environment, then enhanced one will be a better choice. And you can see the performance compared to the benchmark. We try to track the Bloomberg Global Equity Total Return Index. You can see it is since inception last year, we obviously perform better. Our enhanced solution get 13.6% and the pure one near to 11%, which obviously outbid the benchmark. And the other consideration, the cost. How much you pay for our income solution compared to the income funds, bond funds you buy from retail banks, private banks, or some online brokers. The first thing we have to focusing on is the subscription fee you can see here. We don't charge any subscription fee for our clients. But if you look into buying bond funds from retail banks, online brokers, at least 1% charge, or up to maybe 2.5, even 3%. So this will be a very significant cost for you to invest into similar solution. When you put 1 million into bond funds, then actually only 990K will be put into investment. That means the portfolio has to rise over 1% to offset that subscription fee. But aside, we don't charge any subscription fee here. So 1 million we will go into directly invest into our income solution. That will be a very significant difference here. Another one is the fund trader fee, the fund level fee, which I think many investors may not be very, may not notify this fund level fee. Actually, we also rebate that part, which is the commission that charged by the fund house, but go back to the distributor like retail banks, different online platforms. We want to make it transparent. With all of these trader fee, we rebate back to the client. So you can see there will be only half of that 1.12% of those trader fee charged by other platforms. And we also offer discretionary management service to all our clients, which only private bank will give this offer to customer. But we charge at a very low level, just 35 to 65 basis points. So altogether, you can see we just charge 1.21% for Hong Kong people to invest into the income solution, which obviously lower than the total cost of different platforms. And for our equity solution, Core Equity 100, we will take into 3 different major principles. First one, diversification into different sectors. We mainly focusing on US market stocks. We will keep a low-cost approach without too much frequent trading, and also a long-term perspective. And you can see these some of the big names we are investing. We try to look into different sectors and pick those we see there will be growth in the coming futures. And diversification is the main key for our portfolio, and also this portfolio is also good for those people who want to have a regular saving purpose, doing some regular investment, a DCA approach, a dollar cost averaging approach. Then it is also ideal, and we can cater for those clients. If you don't want to put a lump sum into, say, single equities or equity funds or portfolio, then you can try to leverage on our solution to do a monthly investment. And the portfolio, actually, you can, if you compare to also MSCI World Index, which most of the global equity funds, global equity portfolio we try to take reference to, over 15 years, the annualized return we got 13.3%, and you can see the curve, the blue line here, which over 6 times grows up. But for the MSCI World Index, just 4 times more, which is obviously significantly outperformance. So to sum up, this all the portfolio that we are talking about. For thematic ones, we don't have time to cover today. But if you want to know more about that, you can also come to us. We will answer those questions. And for cash management solution here, you can also, maybe if you have either cash from banks, want to optimize the saving, you can also consider a money market fund in US dollar solution, and also that cash plus fixed solution. Yeah, that's also an exclusive offer mentioned by our teammate. You can try to, try now to download the Syfe apps by scanning this code. And also, if today we give exclusive offer to all of you guys here, by depositing 10K, then you get $200, and for 100K you get $800 by putting in this promotion code 3. So yeah, let's pause here. Thank you all of your attention. Thank you. Okay. We start the panel discussion soon, and we have one more guest here. Let me introduce our general manager and head of Syfe Hong Kong, Kevin Lee, will be here. So today panel discussion, I think because all of you have left some of the interest topic before you come to this event, you scan QR code, and then one of the most people will ask questions on is because I think most of the people here may not know too much about Syfe, and so I think this question better goes to Kelvin. How is Syfe and position and different from other digital platforms, say broker, virtual banks? What makes Syfe more unique? And actually, I also see some of the recent news around Syfe and Manulife partnership. So can you also share more on this? Yeah.
Great, thanks, Morten. So, first of all, thanks everyone for coming. Let me introduce a bit more about myself first, right? I'm the head of Hong Kong, and previously I was the APAC head of digital business from Shoulders Investment, one of the largest UK-based company. And indeed, this week is a very important week. I'm not sure how many of you are close to FinTech, but this is a FinTech Week Hong Kong, right? How many of you actually were in the FinTech Week? Oh, great, 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 great. I am also the co-chair of the Wealth Tech Committee from the FinTech Association of Hong Kong. And this week, wow, it's packed with a lot of people, right? And we also just had a forum together with BlackRock in the FinTech Week talking about how financial institutions actually work with Wealth Tech, as Wealth Tech are really growing rapidly in APAC, right? So what's Wealth Tech? What's Wealth Management Platform, right? Wow, that's not the right timing for how I want it to be. But yeah, so a lot of people will ask, right? In Hong Kong, we have traditional banks. We have virtual banks, 8 virtual banks, right? More than in Singapore, right? And we have a lot of broker, whether it's digital or offline brokers with the fiscal RMs, right? And indeed, in Hong Kong, in APAC actually, right? Wealth management platform or wealth tech have been growing rapidly, right? And previously I worked in McKinsey and Co, right? According to a recent McKinsey report, in Asia Pac, considering direct-to-consumer and business-to-business wealth management platform, dedicated wealth management platform, the AUM of that would surpass like 2 trillion by 2027 across APAC. And there were multiple markets having leading wealth tech growing rapidly. And in Singapore is one of those that some of the largest one actually all recently came to Hong Kong. And Syfe is one of those that are managing tens of billions of AUM, right? So how are we different? I would say in 3 areas, right? One is really around kind of the product innovation that we're doing, right? So Syfe would provide access to different asset class, right? Not just mutual fund, but also ETF, but also like what Morten mentioned, time deposit. As simple as time deposit, we create a dedicated investment management solution to multiple banks' time deposit. I'm not sure how many of you have time deposit. Can you raise your hand? Time deposit? Yeah, quite a lot, right? And indeed, in Hong Kong, there's always something like promo, right? Like, can I hit the promo offer to get that particular time deposit rate? As simple as that, Syfe innovated a solution, right? That we invest in multiple banks time deposit, and the partners that will work with are the leading retail banks, right? Hong Kong MA regulated banks like HSBC, like ANZ, right? We innovate on products. We create specific products and partnership in both Singapore and Hong Kong that are unique to the market need. And in Hong Kong, there are trillions of Hong Kong dollars in the bank, not invested or just in time deposit, at a relatively lower rate. And we offer the opportunity for everyone with no minimum to invest in closer to or equivalent to a corporate rate. So that's really innovation, and that's something we work with the regulator very closely through Archit, right? And when we first say, hey, we want to launch something like that, it's called cash plus fix. In Singapore, we call it cash plus guarantee, right? They will be like, oh, we haven't heard of something like that, right? And that's innovation. I think that's the most important. We want to bring new things to the market. Second thing is the premium and the institutional-led investment service that we want to bring it to everyone. It's a big mission, I would say, right? So we have guys like Archie from the UBS, people from Morgan Stanley, from different leading investment firms. And the fact that we're only charging 35 basis points and 65 basis points, I think that's really the differentiation. So we really want to bring professional investment, active investment at a fraction of the cost, right? And that's what our mission is, right? As a company, as a whole. And then the last, I think is a very ambitious one. And I have to say it's a very ambitious one, but we aim to be all in one. What does it mean, right? Anything about wealth, we want it to be all in one. We have cash management, we have managed portfolio, and in Singapore, we actually have brokerage as well, like direct trading. But we do it differently, we can share more. In Hong Kong, we haven't launched yet. For some reason, we are planning for that, right? And in Australia, we trade crypto. And now in Hong Kong, we just expanded into retirement planning. So if you put the picture together, we want to create something digitally empowered, but it's like your personal iBanker. The personal iBanker that will help you across your cash, your short-term, your mid-term need, long-term need, and to your retirement and post-retirement need, generating passive income. And that ambition has led to the today's success of Syfe being one of the few wealth tech. When we raised Series C recently, we announced profitability in Singapore. I can say a lot of virtual banks nowadays still like suffering loss, right? I'm sure you guys know from the reports. And being profitable, what does it mean? We're an efficient company. We don't always, put all our eggs here and there and burn cash, right? We do things efficiently, right? And the most important thing is we want to stay there in the market so that you guys, when you invest with us, you feel safe. And Syfe is one of the meaning. Syfe also means wallet in certain language. Safe wallet is something we want to build, right? A bit long, but because I'm not doing the intro, so I'm trying to share more with you guys, on that.
Yeah, thanks, Kelvin. Very detailed information about Syfe. I think overall you can see there is different kinds of solution that tailor for different people, and even if you find maybe at Syfe you don't find any product that is tailored, we want to find something special, then we can also consider to create something new for our clients. That would be our proposition at Syfe. So we just want to know more, ask questions directly from audience. Maybe any one of you has any questions for today's seminars, or any questions about investment, about Syfe, then you can raise your hand and we can pass the mic to you to ask the questions. Okay.
Thank you very much. I have a question to Kevin as the head of Syfe HK. So my question is about, these days we've got lots of platforms offering, providing all that sort of product offerings for people to invest. For example, like we've got now digital banks, they do the same, time deposits, even, different investment tools. And now we've got Syfe in Hong Kong. You are also saying that you are different from other platforms, and also because my question is, when do you think that Hong Kong, if just looking at the market, a new market that you are in, so do you think that people have that can make that sort of well-informed decisions in order to which platform to use, and what actually makes you stand out from the rest of the digital banks and other platforms in terms of investment? And what you're saying, because people, if we invest with you, we can save lots of money on different fees. And for example, I've been a kind of a very traditional person working with conventional banks, and because I'm a person who likes that sort of face-to-face communication. But you are saying that these days, for example, if I want to get some personal advice on what platforms to use and what sort of investment tools to use, so I can only need to chat someone through your app. But how about those people who are not really into that sort of online communication or chatting to someone that you've never seen before? So what actually makes you stand out from other platforms? While if you look at retail banks, they still have relationship managers, that's using kind of a human approach towards that sort of thing.
Lovely. I really like your questions, and thank you for that, right? And really that means you're seriously considering. And not a planned question here, again. So there were a couple of questions. Let me break it down, right? So one thing is about Hong Kong, how Hong Kong people are kind of seeing the new kind of platforms, and how do I see them adopting different platforms, right? Especially, I had APAC exposure when I was working in Schroders Investment, right? Seeing the rapid growth of different wealth techs across APAC, right? How am I seeing Hong Kong people taking this in, right? I have to say, since JPEGs and the many fraud cases, I'm sure some of you know about this, right? Some non-licensed entity coming to Hong Kong, deceiving billions of Hong Kong dollars, right? I would say Hong Kong people nowadays are more cautious. But Hong Kong people are always, Hong Kong investors are always very smart in their investment decision making, right? And I would say there are two things. One is a lot of you guys don't stick with one platform. Even traditional banks, you have multiple banks. You always want to also diversify your risk by platforms, right? And we can see that one Hong Kong investor, they will have a few traditional banks for different purposes, a few virtual banks, and they are starting to adopt platforms like us, individual wealth manager, because we do have our niche. We do have some products that offer real higher rate, because virtual banks in terms of saving accounts and time deposits, a lot of those are promo-led. And I would say it will be a certain period, they say 10%, but only 7 days. Yeah, or digital banks, right? Yeah. And for us, right, when we create something without the promos and the real rate, and when people compare product, we do product first, right? Product market fit, then brand building, right? We don't burn cash on brand building first. That's how we are successful in Singapore as an efficient company. And there are two lines. One is our AUM, one is our cost of acquisition per client, right? That means as we grow, we are more and more efficient. And this is something a lot of the digital banks may not be able to do at their current phase of business, right? So that's one thing that we're different. And I think in future, Hong Kong people is not going to move all the assets in any one of the category. Hong Kong investors, from what I see, like many other markets in Australia, in Southeast Asia, especially in Thailand, in Indonesia, where a lot of people are adopting digital technologies, the adoption rate will continue to increase. And everybody of you will start to diversify also your assets across platforms. And different platforms will have different positioning. Maybe the banks, there are some niche like what you mentioned on the RM, right? But I want to address your last question on the RM first, right? Is that we are hybrid. We actually have a group of advisors, and we understand the need of Hong Kong people and Singaporean, and we also have businesses in Australia. We know that for some sophisticated investment decisions, it's very difficult to be served by digital. So we don't call ourselves digital-only company. We call ourselves digital first, because we do have, Morton is our investment advisory lead, and we have a team of advisors and customer service representative, right? And there is one of the friends downstairs coming to me that I call your hotline, but I can't reach you. That's a problem, but that's also something we have to accept, that we are not human-led. And there are chances that we may not pick up every phone calls, right? But we provide professional services primarily through digital. A lot of our clients reach out to us through WhatsApp, and we would answer them, if not instantly, within our SLA. So on that human touch, we will offer you, right? That's not a problem, right? And we have differentiated product that will feed part of your need. But there's one thing that I want to stress, right? I know it's long, your question was long, right? But I'll cut it short for the last one is, our target audience, apart from a lot of you, I think you guys also are investor yourself. Look at the retail bank balance of 7.7 trillion Hong Kong dollar plus, right? In the bank with 3 to 4 trillion not being invested. That's a problem for both the banks and everybody. If the money are not invested, not in the economy, it's not good for anyone. And our target customer, what we have been helping a lot of our investors, our clients from Singapore, 250K, right, to Hong Kong now in our year 1 and year 2. A lot of them, they're busy. They're professionals. They're lawyers. They are doctors. They have no time to invest, right? And then we help them to invest in cash plus, to income plus in bonds and balance portfolio, and eventually to brokerage, right? So that we are creating a new market. We are doing blue ocean. That's how we are different. And if a lot of you are also busy on investment, you don't know how to spend your time or start, right? I think Syfe will be someone that can help you, because we don't charge commission. So these advisors would not have commission, right? Having one more client, they won't earn more, right? We want to be truly independent. Yeah.
I'll just add one thing, like when you were comparing digital banks, deposit rates versus us, like I was looking at some of the banks' rates right now. Like none of the banks, if you exclude the promotional rate, which is for very short period of time, 30 days or so, the rates are like less than 2% or close to 2.5%. The rates that we are offering, again, it's true rates are close to 4%. So yes, like a lot of digital banks are marketing very high rates, but if you go into terms and conditions there, either they're for very short period of time, or you need to have a very high minimum or some other investment services. So here, like just to add one thing is like I think from our perspective, like it's really about bringing true innovation and not hiding behind promotions and those things, and something which people can continue to invest into and stay there for longer and longer period of time.
Okay. Yeah. Next. Yeah. Yeah.
Hello. This is more of a question for Syfe. So I'm actually very curious about the innovation involved with being able to achieve such low rates in terms of the service fee, but also being profitable, which I think you mentioned is like a rare thing in this category. Exactly. So I'm curious from like a consumer standpoint, like what the innovation is, and I think whatever the innovation is, it's not something that even if you tell people they can copy, because that's how you guys reach where you are. And so I think you just mentioned you reached Series C. I think you mentioned that. So okay, now I know you guys are a much bigger company. So most of the profit, like to be profitable, did it come from hitting an inflection point of the kind of amount of users you needed to afford like such great talent and all that, or what is the innovation behind being able to achieve this kind of data point? Yeah.
So maybe I can start a bit and I'll let Archit also cover on the other aspect, right? I want to put it into like an equation, right? Like profitability, basically revenue minus cost, right? So you want to be profitable with such a low margin, right? Though these guys are, like Archit iBankers in the past, like managing multi-billion US dollar himself, right? Like coming to a company, right, to create the same level of service, but charging really only fraction of that, right? That means your revenue per portfolio, per actual AUM is much lower, right? And the cost, then you have to be very, very efficient. And how to be efficient? I came from consulting background and partnership and strategy background in the past in insurers, right? One thing is about partnership. The fact that we're like today with BlackRock, and if you didn't know, go and search Syfe and Manulife. We have done another innovation in Hong Kong related to the retirement investment, right? When we partner with Manulife, the largest MPF provider in town, right? And we are on the news of 40 media. Did we spend $1? No, but we are on 40 media on awareness, right? First that. And then we were in 20 events already. Did we spend $1? No. But what we did is we created one of the first in town digital investment advisory service that help Hong Kong people invest at MPF. Because MPF past 5-year return per year is only around -1 to 2.2% per annum, right? And if you could actively manage that using the institutional approach, we could boost the annual return, potential boost it, right? So that your retirement will be better. So we created a fully digital solution supported by our advisors, right? And that's an innovation that helped the industry, helped everybody. And then we just, actually recent weeks, we just announced the phase 2 pilot to extend to the 2 million customers of Manulife. We created that journey and this guy supported that, right? As an example in Hong Kong. And across the entire journey, apart from the people costs, and the people are here anyway, right? We didn't spend any on marketing on the others. And that's how you become efficient when you work on innovation. I think Archie can supplement a bit on the other investment and other product side, yeah.
Yeah, I think I would say two main things to add as well. Like one, innovation, product innovation. I think, and this is something which I think over the last 5-6 years of our existence, we have strongly focused on. Like to take examples, some of the stuff from Singapore, like we partnered up with Singapore Exchange to create again the first of its kind, like a REITs portfolio, which if it was actually a listed product in Singapore, it would have been the largest one. Second, we partnered up with PIMCO, we partnered up with BlackRock to create, again, very bespoke fixed income portfolios and the fixed deposit product that we were mentioning. So I think product innovation is very core because, there are hundreds of platforms, including banks, digital banks, digital brokers. If we cannot differentiate, we cannot succeed. Again, in being a digital wealth player, and at the same time, with innovation, bringing that institutional level of mindset, which is where all of us come from. I think second thing is just to give an example around cost. We do have advisors across Hong Kong, Singapore, but just to give you a sense, we have 250,000 users. For those 250,000 users, we have less than 10 advisors. Compare this setup with any kind of bank or other institutions, and that's where humongous amount of cost goes through, which is human force. And it's not like we've been there, and generally we all tend to feel that we need a human touch, Yes, we all need it, maybe for the first time, maybe for the second time. But as we get more easier in understanding the platform, the products, that human touch, maybe you need it every 6 months. So this is how we have tried to build a platform to make it easy, efficient, simple for people to use. And that's where, again, from a cost perspective, that's how we are efficient.
Yeah. But I think revenue plays a big part. Why? Because what Archie mentioned, the mass that we gather and tens of billions of assets, right? That's the biggest foundation. But how to reach that with low customer acquisition costs, right? We as a firm, we don't trust that people that are acquire through promo, right? The average promo to bring your affiliate in town to help you get somebody in is at least 2,000 Hong Kong dollar as the acquisition cost for getting somebody to help you get a client, right? The fact that we bring you guys here, one thing is really how we bring simple products in a very, very professional way and low-cost model, and you guys really tried it out, and then you would then tell the other friends. A lot of our clients come from also referral, because they're people that are convinced. So when we acquire clients, we're looking at the quality, not only quantity, right? There could be 1 million customers, but only a fraction of them investing. It doesn't help us, right? And we don't want to do something that would not give us the strategic long-term view, right? So when we invest in what we do, right? As simple as just a cash plus guarantee product, as we mentioned in Singapore, right? Multiple banks time deposit. When it's out, and also in Hong Kong, the fix is out, the CAC instantly went down. I mean, the customer acquisition cost instantly went down because the proposition is very simple. There's a marketing angle to that, and it's very easy to explain to everyone. Because when I ask everybody of you how many you do time deposit, now you can relate to my product. And the product is basically an investment service of multiple banks time deposit. One account, multiple banks. How great it is, right? And getting the corporate rate, right? So the way that Syfe simplify complex solutions, make it a very strong marketing angle, and make the acquisition rapid, right, in terms of the AUM. So I guess that's really one of the things that we do. Yeah.
Yeah. So any questions? Any more questions about Syfe? Yeah. Okay. So at the back.
I don't know why every time I speak, right, then it's noisy, and then I raise my voice. It's weird timing. But anyway, yeah.
Right. So thank you. My question is to Archit. So just now, Archit, you shared a very interesting point about how in the next decade, fixed income is expected to outgrow equities, which is something I think quite new to traditional thinking. So I took a look at. I'm actually a client now, or I would say user of Syfe in Singapore. So I'm Singaporean but working in Hong Kong right now. So thinking of opening a Hong Kong account. And I know that your managed portfolio, we can choose fixed income or equities. So let's say for growth, do you then recommend going against, the convention to then invest more in fixed income going forward? Thank you.
Yeah, so I think the point I was trying to make is I think we have been very used to double-digit returns in equity markets and for last 2 decades, ignoring the financial crisis. And that has been for a long period of time fueled by very low interest rates. Now this environment is changing and means there is no second doubt about it. Hence, I think the overall, as the interest rates are higher, the cost of capital for companies is higher. Eventually, I think, of course, innovation, which is what we are seeing from AI, will give that boost in the near term to valuations, and I agree in the next couple of years, like what Natasha was saying, this is a trend which may continue, but over the next 10 years, not sure. And if the interest rates stay elevated, which is like even reflective in the 10-year treasury yields, which are still above 4%, fixed income is something not to ignore. I think which has been again, like the interest rates were pretty close to zero for a decade plus. So the point in our view is like I think fixed income now should play a bigger role overall than previously it used to in overall asset allocation, and something we should all not ignore.
Yeah, anything?
No, I just completely agree actually on the fixed income side. I think fixed income for a long time was uninvestable in that yields are just too low really. So the fact that now you've got structurally higher income, you can use fixed income for income, and you can use diversified fixed income is just really important.
I guess I want to ask the audience, how many of you have never invested in fixed income? Yeah, there are some, right? Or how many of you actively invest in fixed income? You raise your hand. So you're either not investing or not as active, right? But this guy looks like the expert, right? You can also, share knowledge among yourself, right? I guess having the trend, I guess a lot of questions people will have is, then how? How do I even start? Where to start? Which region? Should I buy strict bond or a fund, or which fund, right? So I think that's another question normally a lot of people will have, and that may not be something we will answer on the stage, but yeah, we'll leave it there. And then if fixed income is really an asset class, having that prospect in the coming years, and then always, right, in the interest rate cut, right? And if you're not looking at that, then I think you're in the right event. And after the event, make sure you continue the networking, and then talk to all these guys, Natasha, and then really get into action. That will be my call. Yeah, sorry, someone is asking a question. Yeah.
Hi, this is Nicholas. So this one is for Syfe, and I want to know, like you said, you've got a core equity 100 portfolio. So like, what if some of the stocks that is not in your portfolio, they're going hard, they're going so volatile, high volume? Is there a frequent or a regular review or screening in, out, addition, deletion for that portfolio? And what are the criteria? Like, do you track on like moving 12 months, daily trading volume, or is that methodology behind?
Okay, I can start. So yeah, so I think one general philosophy how we construct portfolios is long term. So we are, and this is again the philosophical side of the company as well, that we want to help people build their wealth for a longer term. So we don't super actively manage our portfolios. So it's not like we're rebalancing every week or every month. Typical rebalancing cycles for us are 6 months. And again, in the light of when we are thinking about 5-year, 10-year, 20 years wealth generation, this is still frequent enough. Now, how we construct our equity 100 portfolio is again a mix of few things. Like we use, I'm not sure if you'll be familiar with like modern portfolio theory technique. What it means really is like we try to maximize the returns per risk taken. So we run simulations, we run back tests across multi-decades. We have investment team in Hong Kong, Singapore. We all come from very institutional background, over 100 years of experience across the team. We have built those tools in-house. Now, second thing is, like, do we do stock selection, to your point, like, or we look at moving averages or not? Not really. So how we construct our portfolios is more based on either factors, sectors, country exposures. So more looking at from a perspective whether how much should go into US, China, and for example, right now we are slightly tilted or overweight China in our portfolios. And again, still from a long-term lens perspective, not how things will perform in next 1 to 2 months, but how things will perform in next 3, 5, 10 years. And similarly, factors like value, quality value is like, okay, how relatively cheaper the valuations of the companies are, quality is how strong their balance sheets are. We look at more of those elements, and it's like a top-down approach rather than individual stock picking. And we believe, again, if we take a lens from a longer-term perspective, these play a bigger role. I mean, there are some stats we can share, like if we look at, again, last 30 years of data, 98% of the returns come from asset allocation or factor allocation, and 2% of the returns come from timing or even stock picking. So this is, again very quantitative based, thought through based approach.
Okay, so yeah.
What's your opinion on the use of options in investment?
So I think first, like I think options is not for everyone. People who understand options should only try to use options. Now, options can be used for multiple purposes, either to help protect your portfolio from downside, or generate income by selling options, or buying like call options to maximize the upside. So in our portfolios, if you think about it, we are not using options. It's simple vanilla, either mutual fund stocks or ETF built portfolios in Hong Kong. In Singapore, we very recently actually launched what we call a protected portfolio. Again, very unique, and again goes back to the innovation that we are trying to do. That portfolio uses options. What it does is simply it protects your downside. It's based on S&P, so it caps your downside to a couple of %, but helps you participate in the upside. So like currently like 11-12%. It's a very, very good alternate for people who are risk averse. If equity markets have 3, 4, 5, 6% annualized return, but your downside is pretty much protected, it's actually much better than cash investments. So in our portfolios, like and we have started using options recently in Singapore, in Hong Kong yet to come. The last thing I want to say is like our positioning is like we're still trying to cater to mass affluent clients. So people who are very new to investing, who doesn't even may not even have heard of options or may not even understand options. So that's one philosophical thing, that when do we start including options, because that might not be even relevant for most of the clients that we want to target. But yes, I think in Singapore we have come to a stage where we have matured enough. We have a large client base, hence we have started moving into those option-based portfolios as well.
Yeah, I would say the clients grow with us, right? Like for those that are not familiar with, let's say some of you with fixed income, they then started investing in our Income Plus, right? And then later on, they are still very skeptical about like having exposure in equity, but having a protected portfolio with the downside protection to only a few %, right? Loss, right? They are more comfortable to increase their equity exposure, right? Then I would say the product would provide not only for like new investors, so for experienced investors like some of you, you would instantly find the niche because the product is simple enough. Either the cost ratio is lower, so there are people coming in like recently in Hong Kong, right? They're like they're currently iBankers, and then they just come in and put in like 10, 15 million Hong Kong dollar without even speaking to us. And it was like, oh, today suddenly there's a major inflow. And then later on when we found out more, basically they just see that our income portfolio performs, aligns with the investment strategy. They're professional investors, right? They basically know the cost ratio is good, they compare different products, and they directly invest, right? So just to add to like Arch's point, yes, we design things in a simple way for everyone, but for experienced investors, they would also find a way out with some of the products they will offer. Yeah.
Okay, thanks, Kelvin and Archie. And because the time is quite limited, we just accept 1 to 2 more questions from all of you. So grab this chance, and any questions, you can just raise your hand. Okay. No. Okay. Okay. Oh. Okay. So yeah.
Perhaps just a fun question to wrap up then. How do we invest in your Series D? And will you make it available on your platform?
So we're at the Series C1, right? And I would say during this time when interest rate is high, the group overall, our founder Juve and a lot of the senior management, our COO Sam, they've done a phenomenal job together with every cyber in the company, right? And because nowadays, when you see fintech raise funding, we call it normally a down round. That means you need to reduce your valuation in order to get funding because you're running out of cash, right? We have raised an up round. We have even raised it together with profitability. That means in Singapore as a group, in Singapore we are self-sustaining, right? We actually have a lot of aggressive plan that we're working on, right? I think that question is not easy to answer on how to participate because at this point in time, do we need cash? Maybe not, right?
So there might not be a Series D. We might directly go to IPO.
But yes, I mean, stay in touch with us and thank you for coming, right? We have a lot of plans for Hong Kong. Hong Kong is a very strategic market. And actually, with my role in the FinTech Association, right? And recently, if you're not in the FinTech Association, also join us. We just signed an MOU with the Shenzhen FinTech Association and with also Macau and different alliances, right? And this city is going to open up a lot of opportunities. And personally, I just visited Shenzhen and some of those facilities on, different fintechs and finance and technology and innovation related, network and facilities, right? I would say in Hong Kong, we are only at a very much at a starting point on our innovation on products and different areas. Stay in touch with us, download the app, be a customer, come to our events, and I will ensure you will see more and more innovation coming up. And we have more story to share than on the stage we can share. Like somebody asked about option, we share a protected portfolio, right? That's something normally in the past only available to professional investors or private investors, right? But remember that protected portfolio we have brought in Singapore, not in Hong Kong yet, that solution is available to everyone again. And that's how we are different. We can also launch private offerings for PI, right? And in our platform, there are quite some PI as well. But our passion is really bringing that solution to everyone and everyone's equal, right? It's not like you have 10 million US versus you have 1 million US or you have 100K. We'll treat you differently. You come to Syfe, we have the simple product that will fit different people's needs. You will always find something.
Okay, so any more questions? If not yet, just thanks coming, enjoy the drinks, and if you have more questions, you can ask directly to any one of our experts today. Thank you.
Thank you.